Video we'll be going over IRS Form 1098-Q, qualifying longevity annuity contract information. This is an informational return that's issued by any company that is entered into a annuity contract, specifically a qualifying longevity annuity contract with a participant, also known as a QLAC. So if you've received a Form 1098-Q, that means that you own a QLAC, and there are a couple of things that you should be aware of. First of all, this tax form has nothing to do with the tax implications of your annuity payments. At some point, when you start receiving payments from your QLAC, you will have to pay taxes on that taxable income. However, Form 1098-Q simply is reporting to you the amount that you've paid into the annuity and the fair market value of that annuity at the end of the tax year. You don't need to do anything with this for your tax return. The only time that you will be expected to do something is when you start actually receiving annuity payments. However, your annuity company is required to submit this to the IRS every year for each contract that they have, and they're required to give you a copy of it. So now, one thing to know about your QLAC is that generally they're purchased with money that you've saved either in an IRA or in a qualified retirement plan with pre-tax money. And the purpose of a QLAC for a lot of tax situations is simply to either reduce the required minimum distribution or to segregate a certain amount of your IRA balance for down the line, so that when you turn the age at which you're supposed to start taking required minimum distributions, the balance of your IRA or your qualified plan that's locked up in your QLAC does not count against your RMD. So that's primary purpose number one. Primary purpose number two is simply for longevity purposes. This is a great tool for people that have a pretty good feeling, either due to family history, health, whatever the case may be, that they're going to live into their 90s, even past 100. So what happens is you purchase the QLAC in year one. At the end of year one, you're going to receive a Form 1098-Q. And you're going to receive this in each year until you either turn 85 or you pass away. In the event of your death, if the sole beneficiary under this contract is your surviving spouse, then your annuity company will continue giving the statement to your spouse until distributions start or the year in which your spouse passes away. So again, you don't have to do anything with the information on this form. You should keep it in your records and kind of just make mental notes if there are things that you think you need to discuss with the annuity company. Now, one last thing before we get into the form itself, there are a couple of changes that have happened as a result of the Secure Act 2.0, which was passed late in 2022. So there are QLACs that were issued before December 29th, 2022, and then QLACs that were issued on December 29th, 2022 and later. The ones that were issued before are subject to a 25% ceiling, which means that the QLAC contract could not take up more than 25% of either your IRA balance, across all traditional IRAs, not counting Roth accounts, or workplace retirement plan balances. After the Secure Act passage, that limitation has been removed. However, there is also a dollar threshold Prior to Secure Act 2.0, that dollar threshold was about $135,000. After Secure Act 2.0, that has been raised to $200,000 and will be adjusted by the IRS each year for inflation purposes. So just a couple of notes so that you understand that. We're going to walk through this form. This is obviously a hypothetical 1098Q for our fictional hero, John Doe. On the left-hand side, you can see that the issuer is Acme Annuity Solutions. Participant's name is John Q. Doe, his street address, and then in the bottom left-hand corner, you'll see information about the annuity plan itself. So account number may show an account or some unique number that the issuer has decided to assign. If you have a plan number, name of a plan, and the plan sponsor's EIN, this would be if the contract was purchased under a retirement plan, what that plan number would be, the name of the plan, and the sponsor. So it could be and then whatever the plan sponsor, if he had a workplace employer or like a workplace sponsor for his plan, then that would be the taxpayer or the employer ID number. So his employer, if applicable. If it's under his own IRA, you might not have any of this information. So taxpayer ID numbers are at the top. You should always be able to see the issuer's tax ID number. Your ID number as a participant will be truncated. However, on copy A, which is sent to the IRS, it's never truncated. You'll see the entirety of the taxpayer ID number, whether it's a social security number, individual taxpayer ID number, so on and so forth. Employer ID number, adoption taxpayer ID number, can be any of those. In box 1A, you should see the annuity amount on the start date. So if the payments have not started, it'll show the annuity amount payable on the start date. So let's just say that on the start date, it might be $300,000 and the annuity start date might be, let's say, 2035. So that would be box 1A and 1B. So if you don't have a start date, or it'll be the date on which the annuity is scheduled to start, and it'll be in the month, date, and year format. If box 2 is checked, that means that the start date may be accelerated, and you'll have to take a look at the terms of your contract to understand, how that might happen. In box 3, you'll see the total amount of the premiums that were paid for the contract. So again, in 2020, which is the latest year that the current instructions have been made available, although there is a draft form of these instructions that is due to be released in early 2024. In 2020, the total cumulative premiums could not exceed $135,000 across all QLACs. That has since been raised to $200,000. And then the restriction on 25% of your account balances has been removed for QLACs that were entered into after December 29th, 2022. So let's just say in box 3, that reflects the total amount of the premiums, $100,000. In box 4, this would be the fair market value as of December 31st of 2023. And then boxes 5A through 5L will show the amount of each premium paid for the contract and the day. So let's just say you paid $5,000 in January and it was on the 15th. That's how it would appear in here. If there's more than one payment, let's just say you made two $5,000 payments, the January figure would include $10,000 and then the date of the last payment, which would, let's just say that you made payments on the 15th and the 30th. then that's what it would look like. It would be the date and then the date of the last payment and then the total of all the payments. So again, according to the instructions for the participant, there's nothing actionable here. You don't put any of this in your tax return. When you finally start receiving annuity payments, you'll receive them on a 1099, and 1099-R, that will reflect your taxable income and all of the taxable events associated with your QLAC. So there's not a whole lot that you need to take action on. This is good information, and in the case that you pass away as the annuitant or the owner of the QLAC, this could be good baseline information for your beneficiaries to have, and certainly to be able to take to their accountant to make sense of things. So keep this in your files even if you don't have to do anything with it. We do cover this Form 1098 in our article. You can simply hit the link in the show notes or go to www.teachmepersonalfinance.com, type in IRS Form 1098 in the search bar, and you'll see our article appear. If you like our articles, please subscribe to our newsletter, and if you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, post them in the comment section, and I'll address them as soon as I can. Thank you very much and have a great day.